Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, the EURUSD pair consolidated below the 1.1789-1802 level by the end of the day. Thus, the decline may continue toward the next Fibonacci level of 76, 1.1695. A consolidation above the 1789-1802 zone will work in favor of the euro, and a resumption of growth toward the 127% retracement level, 1.1896. The wave situation on the hourly chart remains simple and clear. The last upward wave broke the previous wave's peak, while the last completed downward wave did not break the previous low. Thus, the trend remains bullish for now. The latest labor market data and the change prospect for the Fed's monetary policy support only the bulls, while the bears remain without much to rely on. For the trend to shift to bearish, the pair needs to fall to the support level of 1.1637, 1645. On the 4-hour chart, the pair consolidated above the horizontal channel, which allowed traders to expect further growth. A rebound from the 161 Fibonacci level, 1.1854, worked in favor US dollar, and some decline towards 1680. A consolidation above 1854 will allow traders to expect continued growth toward 1.2066. No emergent divergences are observed today on any indicator. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. The Bank of England held its meeting yesterday, almost exactly in line with expectations, except for the voting. The forecast was 8-1 for holding the rate, but it turned out to be 7-2. Now expectations for a rate cut have shifted to November. Meanwhile, the realization is spreading through the media and markets that the Fed is unlikely to cut rates twice by year-end. So the BOE is set to retain its leadership in the easing cycle. On the daily chart, the price is preparing to break through support at 1.3525, which coincides with the MACD line. It's a blue line in the graphic. The signal line of the Marlin oscillator is not only about to move into bearish territory, but also looks poised to fall below the bottom of its own range. If both the price and the oscillator move below these technical supports simultaneously, it could give extra momentum to the downtrend. The target zone at 1.3395, 3364 will then open up, with the upper boundary formed by the MACD line on the weekly chart. On the 4-hour chart, the price has established itself below the MACD line, and the Marlin oscillator is heading deeper into negative territory. The current outlook is bearish. That's all for today. See you online soon.